Alright, boom. So look, we got our catalyst, as you can see on the charts. US 30 is declining. We're seeing the Nasdaq fall as well, right from the levels that we talked about. We're seeing gold decline, but I'm not expecting this decline to continue for very long. We're seeing on this chart, which is German 30, we're seeing price hold. Inflation in the US doesn't necessarily relate directly to European markets, but you never know. If the Federal Reserve decides to alter its projections for interest rate cuts, or even potentially hit at a hawkish hike, you can see this fall. But at the moment, we're seeing a recovery in the DAX, and as I mentioned in a few of my other videos, I was long on this Hong Kong chart, and this is the only chart that's up today. We hit my target. I got out here following a 1,500 pip profit, so we've seen quite some good movement in Hong Kong, so that's looking good as well. Today we're seeing Bitcoin continue to fall, following the CPI news, as well as Ethereum and Solana also moving down. Alright, so what am I expecting over the next couple of weeks? Well, today we got our CPI news, and the CPI news was the catalyst for this decline today. I'm expecting price to continue going down today and continue the downtrend as I expected, and to see price pull back down into this range, into the low of this range, and potentially just trading within this range over the next couple of weeks and the next couple of months before we break out and choose a direction. That direction is going to be dependent on CPI, whether or not we still continue to get hot CPI data, or whether or not CPI comes down in the US. If we see CPI reduce or come down, then we might see more of a recovery from the US 30 chart. But at the moment, my initial projection is a decline to the low of this range, which I've been expecting. That's why we've seen every single decline, every single rally has been sold off since we reached the top of this range. Every time we rallied, we came back down, rallied here, came back down, and this was the buy level. If price was able to break above this blue zone, we would have seen price rally to all-time highs, but we failed. We've declined. Now we're about to close below our fair value gap once again, and if we get a close below here over the next couple of days to end the week, we could see price turn red. And this is what I spoke about in one of my prior videos, warning that this was my final warning to investors. So where's this decline going to go? I'm expecting us to retest this level at the lows, at the bare minimum, and depending on our data over the next couple of weeks, next couple of months, it will determine whether or not we're able to stay within the range, or whether or not price will sell off aggressively to fill this imbalance here, to touch this this order block right here, and whether or not, if this order block fails to be held, we could then target all the liquidity that's resting at this level, which from our current levels, a decline from this level would be approximately 15 to 20%, about 16%. So it doesn't look really good for the markets if we decline. But I have two trading accounts. One's for my long only positions and another's for my short positions. So it makes it a lot more easier. I'm considering potentially tomorrow looking for an entry on my short position account to try and sell the market down. But at the moment, I'm currently long on Hong Kong 50, and I'm currently long as well on gold. So that's just the current update. We've got a CPI release today, and that's what has caused the market to decline so aggressively. as investors did not expect such a hot CPI print. It's not very good. It's not looking very good. But yeah, I'm gonna leave the video there. Yes, take note, hit the subscribe button if you've been provided value.